Trading friends, how are you? Tom with Tom Miller Trading. All right, this is the fourth video of the series, and I may add to this later, but this one I'm going to try to wrap up these last 5 items in bold. Um, Trading videos 1, 2, and 3 cover these ones that are italicized here, so if you want to revisit those, just go back to those videos and watch them. I'm going to start with the pre-market warning process. Even though it is Sunday right now, so the market isn't, there's no gappers and that sort of thing right now, but I'll show you kind of the general approach to take. And then we'll talk about support resistance, sideways stocks. We'll talk about uptrends and downtrends, and then the gravity approach using the 60-minute chart. So sit back, relax, and enjoy this video. All right, so first up, we're going to focus on this in bold pre-market morning process. So we talked about in the last video um, that you go through your universe. We established the universe in the earlier videos of stocks that we like to trade. Remember, minding how much volume they do per day. Remember, you want to be like a ninja. You want to be getting in and out of your trades without being seen. Okay, sorry for the interruption there. I had to pause the video for a second and handle that phone call. Um, so we're talking about, if you've done your work in the third video, in the first, second, and third video, you've got an idea of what stocks you want to look at the next morning. Because obviously anything can change overnight, right? Things can be gapping, news comes out, things happen with leadership at companies, things happen with sister companies or companies in the sector or commodities in the sector that the particular stock is in, and it causes things to move overnight. And what you may think or anticipate is going to happen the next day, on the previous day, on the next day, could completely radically change by the morning time. So that's why really getting up early, getting into the market, I'd say typically at least 30 minutes before the market opens. I would say more like an hour, because things can even change leading up to the last 15 minutes. So you may get up, say at market opens at 9:30 Eastern, you're at 8:30 Eastern looking at stocks. So, okay, this looks pretty normal. Literally by 9 o'clock, it could change radically, and by 9:20, it could be completely different. So monitoring the market through that hour or so, at least the last half hour prior to the market opening, is critical, in my opinion, to picking out that low-hanging fruit. Because again, one of my favorite sayings is you shouldn't be a bear, you shouldn't be a bull. What you should be is a predator in the market. You're looking for the easy prey, right? You're looking for the weak and sick animals to go after, whether it be things, whatever your trading style is. And again, that's got to really be in tune with your personality and what your strengths are, and keeping in mind what your weaknesses are, and obviously working on your weaknesses and working on your strengths to get better overall strength as a trader. So look for that easy prey, and the best way to identify that is looking in the pre-market. So having prepared with a list of your top stocks to trade, revisiting those stocks in the morning, okay, and then after doing that, pulling up the gappers and stuff that may not have, definitely weren't even on your radar prior, that are now going to be on your radar because of what they're doing in the pre-market. Okay, so that's really the process for the pre-market. So let's take a look at my gainer, or my universe, and it's sorted by top gainers and losers for the day. And when you have that up in the morning, it'll have the top gainers and losers up to that moment in time in the morning. So basically it can serve as that function there in the morning, or you can pull up, depending on your trading platform, gappers, gaps ups, gap downs, percentage gains, which is basically what this is. So check in with your trading platform, whatever you use, and most of them, I believe, nowadays have this sort of tool that should be available for you to use within your trading platform. All right, so here is my universe. Right here in this little box here, top stocks. You'll see it's sorted from biggest loser here, percentage-wise, and if I go all the way to the bottom, you see it's a giant universe of about 539 right now to the largest percentage gain as of the last trading day. Okay, so there you go. And I've got AMC up now because there's multiple examples in this. So AMC obviously was down 14% on Friday. You'll see here where it was. It closed here on Thursday right here, and it opened here, went all the way up there, came down and closed here. So this is a 14% loss between the close on Thursday and the close on Friday. Now, generally speaking, this is a stock, like it's been in the news, being one of these meme type stocks. You'll see the 60-minute chart here. It's really pulling back right into a buy area between the 20 and 40 period moving averages. Okay. Here you'll see it's extended quite a bit on the daily and on the weekly. The 15 is kind of downtrending, and on the 5-minute chart here, I actually backed this up already. Let me move it out here to today's date, or to the Friday. You can see it's downtrending as well. So the lesson here I want to give you is, let's go back 2 days. This is the day here that it gapped up. Now let me back up the 60-minute chart so you can see as well. So you'll see when it was gapping up 2 days ago. So this is the actual day. You'll notice it was gapping up here above the previous pivot high set in on this daily chart here. That should pique your interest. Okay, this is like a textbook setup that I like to trade. Now there's the daily chart, so I'm just going to go ahead and move the daily chart out because we don't need to worry about that. Let's focus on the 60. So 60, we gapped up here beyond the resistance point. Therefore, it's gotten a gigantic, enormous tradable void. Now this stock obviously moves quite a bit, but you can buy one share and trade one share if that's more in your comfort area. You do 1,000 shares of this, you can make a lot of money and lose a lot of money really quick. So let's just bring this up here into the focus area. Let me see if I can do this here right. There we go. And let's look at the market on the 5-minute chart of the AMC. Gap up, as I mentioned, above all resistance here. You should put this front and center on your radar to look for a long setup. So what happened? Well, it moved up here till about 10:05. It topped out and then started to move down. It made a lower low here, took out these bottoming tails here, attempted to go higher, and then went down again, right? And made another pivot low here. This is that double tap, if you've watched my previous videos, setup where their first long setup on the pullback off the new high, especially off an aggressive gap up, right, typically fails, and it works on the short side as well. And so what you do is you look for the second setup to get long. Market health obviously being a part of it, sector health. But this one with regards to the gap up, okay, the gap up, the popularity of stock now is moving, right? And it's got room to move, and it's stronger to the market, and it's got this double tap setup. This is a low risk trade, in my opinion. So what do? And you have actually 2 entries. So watch this. Watch that second entry. Here you go. You look at this green candle. If you just go strictly off the 5-minute chart. Now you could X-ray down to a 2-minute chart, 3-minute chart, 2-minute chart to get a tighter entry if you wish, and if that's your thing. But you got to be fast. You got to be on top of your game. You'll see the entry here over the high is 39.39, 39.40, right? And the low is 38.36, meaning that's the low. So it's about $1 stop. If you get in at 39.40 and your stop's at say 38.30, it's $1.10 you're risking. So if you buy 100 shares, right, it's $100. If you buy 1,000 shares, it's $1,000. So whatever that comfort zone is for you. And your initial target, conservative target. Now remember, we're thinking this thing's going to go much higher and break the high of the day. But your conservative target is either this pivot high here at 41.26 or this pivot high here at about $42 a share. So you get in, and what you can do is you get in and it rides up, it hits this one right away, pulls back, and gives you the second entry. This is the higher low. If you look at this, is actually a reverse head and shoulders, right? Shoulder, head, shoulder. Buy the crap out of that. And don't sell out here early. Look for higher prices. Now, if you buy, you got to follow your trading plan. If you buy higher shares, then you can sell some of those shares for the more conservative target just to take some money off the board. But if you're doing this straight up to your plan, there's no reason to sell this here. You look for an extrapolation of a double move. So basically it moved here from 37 to 42. So you're looking off the pivot move 39. So that's what, 37 to 42 is $5, 39. So you're looking for a $44 target is your initial target here. Well, it hits the $44 target there, right hits it to the point and then starts to pull back again, right? Offering another possible setup and then goes ballistic. Okay, and then obviously when you get this kind of a move, trade to your plan. Trail stops on the 2s, the 5s, the 15s, however you want to do it. This obviously turned out to be a massive up day, right? Look at that corrective bar there. That'll scare the crap out of someone. Then it goes and pushes back higher even, right? So here you can manage it as you will, as you wish, and again, use your different management styles that you have on your trading plan. Okay, so hopefully you found that useful here. Let me move this back out to where it was. And obviously the candle's going to get a lot smaller because it was a massive up day there on that day. Let me go here, move this out. Okay, so that's AMC. So that was a perfect example. Someone's gapping. And again, like I said, this is a Sunday. We don't have any real gapping information here. It's just how things performed at end of day on Friday, as well as any aftermarket stuff. Sometimes those prices will reflect here. So if you were to get up in the morning and you see stocks gapping like this much of a percentage gain or loss pre-market, and here's the gain side, right? I'd take a look at the charts, see if it's something like AMC where they're gapping above or below any sort of support or resistance area. And then, of course, tie it into the market. You can look at the sectors as well that they're in and make sure that the things are lined up as much as possible. And then just take your shots, trade to your plan. Your plan should be proven to you, right? If you're trading a method, then it should prove to you objectively that over a statistically significant number of trades, you're going to produce more money than lose, right? And you're going to have losses, guaranteed, right? You're going to have, you may win at 35%, 40%, 20%, and still make a ton of money in this business if you manage your trades correctly, manage your exits, and have a method to manage them that's objective and not emotion-based, because that is the key. All right, so moving to the next subject here, looking to trade range-bound stocks at support and resistance. Now, this is actually lesser of a focus. This, I actually just spent 10 minutes going through the universe, just kind of looking for stuff that was trading range-bound. And there isn't a whole lot. Most of the stuff is going up from a trend perspective or going down. And this is one example I show you here on Marriott. You'll see on the weekly chart here in the lower left, you can see that it has trouble around 150. See how it has trouble? It really can't go any higher than 150 to 155. And then it has support around 140. Well, look what happened here. It actually just broke under 140 here, then made a higher low, and then it was only able to retrace half this move. So now it's looking weaker. It's looking like Marriott may roll over on the daily chart. However, and the 60-minute chart, look at this. There's a retracement right to the declining 20. Looks like short is the way to lean on the daily and 60-minute chart. However, if you go to the weekly chart, we just made higher highs. We're actually pulling back right into a buy zone area, right? You got the 50 crossing over the 200, the 20 crossed over the 200 while. You've got nice separation between the two. This looks like it wants to go higher, assuming that the market goes higher. I think the market, if these travel stocks, such as this one, continue their general move higher, this looks good. However, when you get mixed signals like this where the daily and the 60 have rolled over, even though the weekly supports it, I would tend to steer clear of this from a swing long perspective. And I would day trade it short. And if you want to go longer term, say, well, the weekly chart supports it. I'm a longer term trader. I like to hold positions for a few months to a year to beyond that. Based off of this, then you can enter in this area here, swing long at around 142. But just make sure you put your stop here under the low, under this tail. Right? So let's see what that is. 135.35. So say 135, 134. You put a stop in there if you want to trade it for, from the longer term perspective, from more of a long-term investing perspective, and using the charts, which I highly suggest you do when you're longer term investing. You can do that. The chart supports it. The weekly does. But there's mixed signals here on the daily and 60, so I won't even buy this at this point. I usually demand all three to be in alignment, at least the daily and weekly, if I'm looking to swing trade to the long side. Okay, so I'll repeat that. When I'm looking to swing long or swing short, unless it's a climactic type situation where something's getting oversold or overbought, I want the weekly and daily to both be in uptrends, to both be in areas where it's feasible to buy them, maybe even aggressive. For example, here's one I own that I've been tweeting about that I know some of you folks may be in with me, and it looks ready to go higher. VSTM. Cheap stock, and it is really, if you're looking for a flag, a basing breakout setup, now I don't know what's going to happen to this stock. Obviously I don't have a crystal ball, but let's just do a quick analysis on this. We've got the weekly chart here and an uptrend, right? It broke past the flat 200. You got the moving averages here curling up. Now the moving averages are still underneath the 200, which is bearish, but you can see they're coming aggressively higher off this move that it's made, and it's making higher highs and higher lows on the weekly. Boom, weekly supports long. Let's look at the daily. Oh my gosh, I'm salivating with how juicy and sexy this setup is. Big flagpole on massive volume. No one wants to sell it afterwards. Volume's drying up. It's not going higher, but it's not going lower. What does that tell you? That the people are holding here. Anyone who's selling is getting met up with buyers that support it. Now, there's no one buying it, but again, you know, because it's not going higher at this point. There's not more buying pressure than selling pressure, because otherwise the price would reflect that, right? It would go higher, but it's not. But doesn't that make sense, considering the move it just made, that there'd be a consolidation? And then once this starts to catch up, or even sooner, I've got an order. I own this stock, and I've got an order to buy more if it breaks above this high. And if it does, I'm adding to my position. Now, it's a little extended on the weekly, but the daily supports it nicely, very nicely. I'd love to have it maybe take another 5 days to just consolidate here and then maybe go to the market. Look at the 60. Look at how clean this is. Look at the volume drop off. I mean, this, guys, take a picture of this, snapshot this in the video. This is a textbook. Now, that doesn't mean it can't fail. It could break up above the high here and then come back down. Your stop would be below this low, around 380. Okay, that might be too tight. You might want to go 360 or 350. It may pull back all the way down to 3, set up, then go higher, go, you know, to $5, $10 a share. It may just break here. I don't know. I don't know what's going to happen. But what I'm telling you is this: is I'm going to be buying this thing if it breaks above this, and I'll stop in for those extra shares. Okay, underneath this flag, I have to. That's part of my plan. My original shares that I bought way back here, I'm going to hold those and ride, because I think this breakout could fail, but that doesn't mean it's going to continue going in a downtrend. So I have stops on those shares based off of where I entered on a trail stopping perspective on the daily chart. Okay, so I hope that all makes sense to you. But that's a perfect example of something where it's an uptrend and an uptrend and an uptrend. So going back to our sheet here, let's go ahead and unbold that, italicize it. Look to buy stocks in a macro uptrend. So we'll cover both of these here now. Buy stocks in a macro uptrend, extended down to micro time frames, or setting up on the micro time frames, and vice versa. On the short side, look to short or sell stocks in a macro downtrend, but extend it up on the micro time frame. So, for example, you could look at the one I just pulled up, the Marriott. Oh, that's Macy's Marriott. Right, and say, okay, supporting a short here, supporting a short here, supporting a long here, not great. But if I were to short this, see how it's broken up into this gap here, topping tailed out, attempt here, you could have a pretty tight stop. If it doesn't go above the high of this green candle here from Friday and sets up and goes below the low of this candle here, you can short this and have that tight stop and look for an initial move down to the support area here about 140 on a smaller time frame, on a 5-minute time frame, 15-minute time frame, however you want to trade. Okay, so this is something you can look at for possibly for Monday as a possible short idea, depending on what the market's doing. Not a huge tradable void, and again, with the mixed signals, it's probably not something I'm going to put on my radar for Monday, but nonetheless, just kind of going through the thought process of how to think through this. But something like this is kind of more of I would lean short, because these two time frames are supporting a short, even though this one's supporting a long. Whereas with VSTM, supports a long, supports a long, supports a long. Okay, all across the board. Now, is this a day tradable stock? It is. I mean, there's plenty of volume, but you know, unless you get a big move like this, you can make a killing in one day, right here, right? And you could day trade this. If it breaks over 410, you could buy, you know, whatever shares you're comfortable with, put a stop under whatever the 5-minute low or 15-minute low is, and look to pull 3 times, 4 times your risk unit, whatever that is. Okay. Obviously, typically when these move, pivot to top, the next move will be very equal to that. So if you're looking at here, like I say, a dollar move, you know, $4.80, $5 a share, not out of the ballpark of reality, in my opinion, if it breaks. Okay, and then who knows from there? It could go continue to 10, it could go to 0. I don't know. All right, but trade it. Let the candlesticks tell you whether to get in, to get out, to take profits, to take your losses and get out, and conserve your cash for a future trade. All right, so let's look at this QFIN, right? So let's look at some uptrending stocks. Here's one. You see that the weekly chart had a pretty good consolidation, very sloppy nonetheless, but it's up here at new highs, and the 60 supports it, daily supports it. This is one you should be watching long. Now, is it something you should buy right now off of this big day? Probably not. Could it work out? Absolutely, but where's your stop going to be? What's your reward? Where are you going to take profits? And if you don't have a clue, then you shouldn't be in there and trade. And you've got to be able to back up what you're going to do, and it's got to make sense to you. Otherwise, you're gambling. And you can win, you can gamble and win for a while, but all it takes is one loss where you don't accept the loss, or you're squishy on your stop, and you can give all of it back and then some. So establish your trading plan. So QFIN, what am I looking to do? Well, we talked about the gravity approach, right? I talked about here the gravity approach. Let's just touch that base on that one too, right? What that is that the rising 20 and 40 or 20 and 50 period moving averages, whatever you choose to use, they tend to be repellents. So you'll see when a trend starts, every time it comes back in here, it gets pushed back out. And notice, every time it comes way up here, it gets pushed back in. Oh, sorry about that. Phone keeps ringing here. A very busy day here on Sunday. So back to QFIN. So notice how as it comes into this area between the 20 and 40, 20 and 50 period moving averages, it gets repelled and pushed back up, right? And then comes back in, gets pushed back up. As it gets extended away, gravity, the force of it pulls it back in, pushes it back out. So you can see about how far it gets away from the moving average. You can just eyeball it, right? Now these are bigger moves here. So it's very dangerous to be buying here unless you're ready to sit back for this thing to come all the way back to $32, $33 a share before it goes back up. If it goes back up. Doesn't mean it can't go to 35, 32, 33 and then end up down here at 22. That's perfectly legitimate and can happen. But this is what I talk about the gravity effect. So it's good to have these 20 period, 50 period, just one of them. You don't need both of them, or you can have both of them on there as a guide, and you'll see what prices get extended from these things, these moving averages. It's time to sell or take some profits. Okay, they can get stupid extended. They don't have to. Let me see here if I can go back on UPS. Probably let me just pull it back here. Let me get the 60-minute chart shrunk back up. Here's another one you guys should be watching along. I think I talked about it. Look at the weekly chart. Good Lord. Talk about this. Looks like VSTM, doesn't it? Doesn't this look a lot like VSTM? And I love this. I love the fact that it took out the low at 210. So now it's like, okay, you've taken out. People have their stops there. Okay, a lot of people have their stops there. In fact, I don't own this stock right now. Had I been in the swing long, I would have took some profits here if it went under 210. So say I had 100 shares of this, or 1,000. Let's just say 1,000 shares for round numbers. I would say, okay, 1,000 shares off a move like this, off this breakout. I'm going to sell 300 of my 1,000 shares, 30% of my position if it breaks under 210. After it's gone up to 217 change and been basing around setting up, I was like, all right, I'm going to just sell 30% and lock in these profits off this 180 breakout, right? And then the other 700 shares, I'll say, all right, let's see if it goes. Now, if it goes in deeper, maybe it takes out this 50 period, then I dump another maybe 300 shares. And then I'll look, if it sets up to buy, then I'll look to set up to buy. But usually these pullbacks from these basing tops can be harder because there's more overhead resistance, potentially, that can get in the way of prices going higher. Okay, I hope all that makes sense. I kind of went fast there. But UPS is another one. Let's take a look at FedEx. All right, it's definitely strong, but a little bit more sloppy, right? Not quite as extended from the period, the 20 period moving average, right? In fact, it's in the zone here, like it was here. So is this going to now repel it back up? Is it going to push it back up and get it out this far away from this moving averages again, or get pulled back in? 60-minute charts in a downtrend, clean downtrend. 4 days down. Weekly chart, definitely an uptrend, looking like it's right here at minor support, buyable at 300 if you get a setup, right? So mixed signals between the three. So if you're day trading it, it's perfectly fine at the 15-minute, 60-minute downtrend short the thing. Longer term, look for opportunities to get long on the swing side of it, right? I know it's hard for people to shift between the two, but that's the general approach that I use, and it works really, really well as long as you can separate. So each trade is its own individual entity, and you manage it to the candlesticks as they're laid out in front of you in the future without any sort of coloring or recourse or overly vivid imagination about why or why not you should, why you shouldn't take your stop, or you shouldn't take your profit targets, or you shouldn't trail stop and lock in profits, or what have you. Moderna, another one, nice uptrend. Look at this, clean, crisp and clean. Running moving averages. Every time we come back to this 20, it gets repelled, right? Right now we're extended. Look at it. We're about this equidistant from that period moving to where we got a correction. So what would I expect for Monday, Tuesday? Probably a correction to come back in here. Could it just keep going at this pace here, keeping that same distance away from the 20? Absolutely, it could. But the odds are that you'll get more of a retracement here than a push higher unless something happens in the market. You're up. Good God. Off the pivot here, 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row. Some profit taking maybe in store on Monday. I don't know. If the market's strong again, it could keep going. And what happens is people see this, right? And it's not they go, oh, well, I'm going to short it. And they'll short it because they say, well, it's up 8, 9 days in a row. It's extended from the 20-period moving average. And the 60, it's extended here. No one in the right mind would buy this. And those are the people that end up having a short trading career because they're fighting the trend. They're trying to call those tops. And you can do it if you get climactic, but I don't see a climactic type volume setup here at all on this move. Toward the end of the day, you get a little bit of a volume spike, but to me, this thing looks higher. But I'm not buying it. Okay, that's the thing. Just because I'm not going to short something doesn't mean I'm going to buy it either. And just because I'm not going to buy something doesn't mean I'm going to short it. But what I would say is that if you want to buy the stock, absolutely it's an uptrend. Let it pull back. Let it pull back here into the rising moving average and set up for you. Like here, like it pulled back, bottoming tailed out, try to go down again, pop back up, base, breakout, boom, entry right there, 186. There's your entry right there, right on the moving average. I mean, beautiful, right? 186 puts you where? Right here, right at the resistance point, breaking past that. People have their stops there on the short side, right? Beautiful. All right. All right, here's Fubo. Fubo here on the 60-minute chart. Look at this right here. Look, very very similar to what it did here in early June, where it came into the 60 and then boom, come in here. Is it going to boom again? I don't know. It might. It might not. But right now we've got the separation to hand it here. This is the second move into this. I think that the odds are, if the market's strong, this can go higher. You've got a continuation type setup here that actually triggered and looks like it wants to fail. We may get a dive under 26. So I'm thinking out loud, I'd love to see this thing come, maybe a weak market. It pops out at 26, can't go lower. Then I look to get in at 26 with a setup on a 16 or 15-minute chart to the top side, because I like the curl over here. It looks like the trend is changing back here on the daily. The 60 supports along. So Fubo I'm watching. You know, Laser's another one that's also doing this type of bottoming and looks great. Look at this on the 60-minute chart, pulling right back here to the 60. Okay, this is the first time though off the crossover, right, that it's doing it. So it could be very potent if and when it hits. Okay, but it's a little bit more risky because it is the first time. This could just be a shakeout to the top side into the resistance area where it turns right back around and goes lower. So you take your shots. You like it? Great. 24.25, boom, I'm in. Stops 23.60, no questions asked. I don't give up. You know what? If it hits 23.60 after I'm in, I'm out. No questions asked. No adding to the position. No, yeah, but maybe they're just trying to stop me out. No, I'm out. And then if it turns back around and sets up, I'll buy it at 25. I'll buy it higher if it sets up, or I'll buy it lower if it sets up. You don't care. You shouldn't care. You just follow your plan. The plan will keep you out of trouble, man. It will keep you out of trouble, and as long as your system and your plan works. So you got to back test it. You got to make sure it works. Okay, you got to make sure that it produces for you. Otherwise, you'll have no faith in it, and you won't follow it. Why would you follow it? If you had no confidence in what you're doing, you won't follow it. I mean, I don't see why any person would follow it. It'd be crazy. Okay. So anyway, I'll wrap it up here. It's getting kind of long. Hopefully you found there's a lot of good lessons in this. We talked about ideas for this Monday. We talked about the general approach. Uptrend. I didn't show any downtrending stuff. Most everything's going up. I mean, even the golds and silvers. I mean, Newmont, beautiful here. I actually added to the position. I tweeted about it here when it gapped down and it went lower into this tail. I bought it. I bought it in this area because it's in a buy area for me. Right? And I own it a lot cheaper than this. I've been riding this up, and I think this is going to go higher. He had a beautiful setup here. It didn't trigger, came down here, and it's popped up. Now, where's my stop for these additional shares I bought in here? Just under 70. But my original shares I'm going to hold and give it a little bit more space to pull back more. And I might buy them back at 68 if it goes down there. All right? But each trade is its own entity, guys. I cannot stress that enough. You cannot mix those apples and oranges together. All right, guys, with that, I'll let you get on with your Sunday. I hope you enjoyed this video or whatever day you're watching this in the future. Let's go back to this really quick. So there we are talking about the gravity approach. Shorten, we didn't really talk about. We didn't look at any specifics. Not a whole lot of downtrending stocks on all the time frames at this point. They're easy to find, nor should you really be shorting stuff. If anything, if I'm shorting stuff, it's stuff that's stupid extended to the upside, climactic, and I'm just scalping it to the short side. I'm riding it down. Tesla's a good example of something I was shorting when it was up in the 900s. You know, just take advantage of that low-hanging fruit on the short side. But I don't see anything really trending down at this point. But things are they're wavering a little bit. But I mean, in general, things look like they're going to continue to move higher. So the trend is your friend, man. Stay with it. And until next time, Tom at Tom Willard Trading. If you got any emails or any questions, send me an email, comment on the video.